All right, the market is lower, 35 points on the Nifty, 59.65. Ravi Gupta is President and CFO at JubilantFoodWorks. He is joining us right now. Ravi, thanks very much for your time. Why are the third quarter results from Jubilant a disaster, Ravi?
Good morning.
What happened?
I will not use such term which you use, but yes, we had a negative same-store growth in this quarter.
For the first time since listing, so it's pretty much a disaster, right? I mean, you grew 6.6% in Q2, 6%.
No, again, I will repeat that I will not use a disaster.
7.7% in Q4 fiscal 13. It's negative 2.6% in Q3.
Now, let me explain what are the factors which are responsible for the negative same-store growth for JubilantFoodWorks and Domino's Pizza. First and foremost factor for the negative same-store growth is economic growth. Economic growth which leads to lower disposable income and discretionary income for the consumers. On top of it, in the low demand situation, we also have a very high inflation which further reduces the disposable income for the consumers. So it's a kind of double whammy. One side, reduced disposable income, further reduced by the inflation. Food service industry thrives on growth of disposable income and discretionary incomes. And when there is a pressure on that, there is an impact on the consumer and the demand slows down. Now, let me also say that there are two more factors which are impacting it, but 80-90% factors are the two factors which I just mentioned. The other two factors are
let's just stick to the 89. Let's just stick to the big reasons, right? Which you yourself said is 80-90%, which is a slowdown in the economy. There is absolutely no evidence that urban discretionary consumer demand is going to pick up. You have a fixed cost business. So should we expect many more quarters of negative growth from Jubilant?
See, the economic growth does not improve. Definitely, the overall sentiment will continue to be very, very weak, and there will be pressure on the performance. And the only way that the performance can improve is the economic growth reviving and growing in the disposable income.
So I mean, what you're telling me is that if January to March same-store sales growth will be negative, could be minus 2.6, could be more, and there is no visibility on when things will pick up, right? Because the point also is, the other two factors is that you are expanding stores. That will put pressure. Dunkin' Donuts is being opened. That will put pressure. I mean, so, profitability, etc. is going down, at least in the medium term. Long term, of course, we all can sort of, make various assumptions. But near to medium term, it looks pretty bad.
Okay. No, I will not say it is bad. Let me explain the whole story. In the beginning of the year, we were expecting the second half will be better because we were hoping that economic sentiment will be up because of the election coming in, and the economic growth also will be higher, and that's the reason we had forecasted higher same-store growth. Now, as we see today, we are not seeing any upside till the elections, definitely. So there could be pressure continuing on the same-store sales. But our medium-term outlook and long-term outlook remained intact, and that is the reason we have revised our guidance for opening a number of restaurants from 125 to 145. In the beginning of the year, it was 125. Now, we are also investing on commissaries, on the back infrastructure, which will support the growth of these restaurants, because the medium-term outlook is fairly aggressive in what we have. Because Indian economy temporarily is taking there is a slowdown, but long-term view is that it will perform back to same 8-9% levels. Whether it will take 1 year, 2 years, it is very difficult to predict. We are also investing in a new design of the restaurant, which we call Pizza Theater. It is a more exciting format for the consumer who are walking in our restaurant. We are opening our kitchen.
Money.
We are also investing in our product innovation. We have launched Pan Pizza last quarter.
Ravi, which will cost money. The point I'm making is there's nothing wrong with your pizzas or outlets. The situation is external, right? And you are revising. You are going to add more stores than what what you said you will add, right? I spoke to somebody at Yum Brands, and they told me that we've got deep pockets. We're not worried. We're going to expand aggressively. We're focused on the long term. So you've got a competitor. Your nearest. I mean, if I look at your numbers, your lead over the nearest competitor has actually narrowed significantly. And that competitor is expanding.
See, when you look at
Right?
the market share, what we...
Yeah.
I agree with you. What you're saying is, I think both Yum and Domino's are doing the right thing. They're not perturbed by the short-term events, which is declining economic growth in the Indian economy. Because long-term story of the Indian economy is intact, and Yum is also doing the right thing. Whether they have deep pockets or not, I will not like to comment about it. But our sights is set on the medium-term, long-term outlook. We are not perturbed about what is happening in the short term. Yes, it is impacting a margin a bit, definitely, and that gives a little for some thought for thinking for us. But definitely we are not perturbed. We are going ahead. We are revising our target, opening more restaurants. We are investing in commissaries. We are investing in OLO and mobile ordering. We are also investing in product innovation, as I earlier mentioned.
Can you tell me what will be earnings per share for fiscal 14? If you can give me a range, that will be helpful.
See, we have seen extreme volatility in the sales growth across various months. There was very high double-digit kind of growth also we've seen in some of the months, and some of the months we have seen very negative growth. And as a result, we are not able to anticipate what kind of same-store growth we will end up. And as a corollary, we are not able to say that what kind of margins will end up in this year.
Fair enough, Ravi. It's good talking to you. Thanks very much for your time. Good luck. It's a tough external environment, but you.
Thank you.
I mean, you remain.
Thank you.
The hefty investments that you're undertaking shows that you're optimistic, and you explained that to me as well. Thank you. Ravi Gupta, President and CFO at JubilantFoodWorks. Stocks at about 1,075. It's down 17, 18 rupees or so. Let's take that quick break. We're back in 2. There's more coming up on the other side. I just want to put up the intraday as far as Voltas is concerned. We were talking about that in the morning. It's up 5%. So it's a strong gainer today, 114 rupees in an otherwise lackluster market. The management at Sesa Sterlite is joining us on the other side of this quick break. We're back in 2.